Property investors, they always get a bad rap. They're always the villains. They're an easy bash. But what would it mean if they all disappeared from the market?
We're back in your life, and today I am super excited because your boys have done the numbers. Property investors, Michael, get a very bad rap, and today we're going to do what happened if all the property investors disappeared.
Yeah, you should have opened with we're back causing strife, because I feel like this one's going to piss a couple of people off.
That's how you live your life, isn't it? So we're living in a hypothetical world today where all property investors in New Zealand disappeared. Mike, I think it's really easy to blame property investors that they're all evil, they're cockroaches. I mean, you and I have been called that and much worse in the past. Before we break down the numbers of what would happen, why do you think property investors get such a bad rap?
I reckon it's an easy bash. Yep, it's an easy bash, right? Housing is a controversial kind of asset class, especially residential housing. No one's really calling commercial landlords cockroaches, and it's kind of got a few underlying issues, right? Everyone wants a house. Houses, 2021 especially, were way out of a lot of people's reach. And the notion was that was being fueled by investors. So basically people who have money and they can just speculate on the property market at the expense of, say, a first home buyer. And
speaking of the first home buyers, sometimes I will hear from clients going, from an ethics perspective, I don't want to invest into property because I feel like I'm taking that away from somebody. So what we're doing today, if we took away all the property investors, what would happen to house prices? What would happen to New Zealand if none existed? So let's run into the numbers. So first, Mike, there's always a question around, if there's so many property investors and everybody's got these empires, there's actually 440,000 homes that are owned privately by property investors in New Zealand. That's about 21% of all dwellings.
Cool.
And 84% of all of those are rental properties.
Yeah, so less than a quarter.
Yeah. The rest are made up of Kāinga Ora houses, which is about 75,000 houses.
Yep.
And community housing providers like CHIP, they're about 6,700.
So that's your Salvation Army, Red Cross, those sorts of people.
Yeah. So the argument is that some people would go, everybody should have the option and the ability to own their own home. Mike, before I start to break down the numbers, can I just go, do you believe with that sentiment?
Yeah, I do believe in that sentiment. I think that everyone should own their own home and everyone should, have the ability to own their own home. Of course, there will be fringe cases where, not absolutely everyone can do it. But I think for the majority of Kiwis, that should be something that is achievable and a goal that they should hit.
And do you think it's realistic?
Yes, I think it's realistic.
That everybody owns their own home?
Not every single person, but I'm not going to speak in absolutes here, James, but call it like 95% of Kiwis. Yeah, 90% of Kiwis, I think they should be able to own a home.
Okay, well, let's run into the numbers of how many...
James, what do you think?
I think it would be nice in theory.
Yeah.
I think when you look at average incomes, when you look at the average rents, when you look at disposable income, when you look at what house prices would have to drop to make it affordable. Yeah. I mean, I love the idea of every family having security, that they don't have to move their kids from different schools. But I do not think it's a realistic goal. And you've got to ask whether a government would ever want to make, what are the implications if it was realistic?
Yeah, I mean, we're not going to give too much away here, but I've maintained this for quite some time that the housing crisis or the housing affordability crisis is the problem that no one wants to solve, right? Because everyone who has a house would love, I don't think there's anyone out there who says, no, people shouldn't be able to buy their own owner-occupied home. But what that will take is a correction or a drop, right, in house prices. And it's all great for someone else's asset to depreciate in value or decline in value. But I don't want my one to go down, It's like the same as state housing. No one, you'd be very hard pressed to get someone to say, I don't believe that we should provide state housing for people, right? Or that there should be some support. But I don't want it in my backyard. I want it over there, right? And I think that's a really common thing that we run into when we're talking about these concepts with people.
For sure. So let's jump into the numbers. So based off the number of investment properties in the country, with an average household size of about 2.7 per home, it's about 1.2 million people that would be displaced if there was no rental properties in New Zealand. And here's the kicker. There is no way that the government could fund putting 1.2 million people into homes.
How come? Why would they not be able to do that, James? Well, surely they can just print money and buy the houses.
They could. You're the economist, Mike. What's the implication of spending that much money buying 500,000 houses if we printed that much cash?
Zimbabwe, circa 1990s. Yeah.
Yeah. Okay. So that's not going to happen. So essentially what we're saying is that houses would have to be affordable enough for everybody to be able to buy their own home. So if the government couldn't do it, if the public sector couldn't pick up the slack, could renters just buy their own property? So let's run the numbers. The average house price right now is $903,000. The average weekly rent is $560. Now, Mike, for the average person, well, actually just for anybody to be able to buy their first home, how much of a deposit would somebody need to be able to buy a property?
Yeah, cool. So realistically speaking, the banks want you to have 20%. We know you can do it with 10%. So at the moment, $90,000.
Okay, so they would need $90,000, which obviously those that are renting, a lot of those don't have that much money. But let's assume that they do have a 10% deposit, right?
Yeah.
If you look at the numbers around the average savings that Kiwis have, we know it's very low. We know a lot of Kiwis are living week to week. That means mortgage repayments would need to drop to the same level of rents.
Yeah.
Which means that our mortgage repayments would need to be the same $560 a week. Now, the question is, how much would house prices have to drop to make your mortgage repayment the equivalent to the average weekly rent? And we will tell you those numbers after this break.
Whether you're a first home buyer trying to get your foot in the door, a property investor expanding your portfolio, or just wanting a sharper deal on your current mortgage, the team at Lighthouse Mortgages can help you find the right solution. Tailored to your goals, not the bank's. Now, back to the episode.
So, Mike, I said the average house price is $903,000 right now.
Yeah.
And that to make mortgage repayments affordable, because it's all about you got to be able to afford the mortgage, right? To make the mortgages affordable, they would need to drop to what rents are right now. House prices would need to drop 51.5% from $903,000 to $438,000. So the average Kiwi could own their own home with their current lifestyle and make those mortgage repayments. Michael John Vincent, what do you think?
Yeah, look, I mean, the math is what the math is, right? It's more around, this is a hypothetical situation. And, you know, if that happened, I can't, and I've been thinking about this quite a bit. I can't think of a way that you could realistically have that happen in our economy without a complete collapse of the banking system. And I've thought about buying out the debt as opposed to buying the house for people on investment properties. That solves the debt part on their investments, but it doesn't solve the equity drop or the value drop in their owner-occupied homes. I thought about, could you buy out everyone's home and then resell it to them? I've thought about, 100 different ways that you could try and do this. And effectively, unless you bought every single house in New Zealand and cleared all of the debt and then resold it back to the owners of the owner-occupiers and the new people for the investment properties, it would be you would seize up the banking industry instantly. And when you seize the banks, there's no economy.
Well, that's interesting because I talked about the example of if Kai Ora bought all of the current investment property stock, which is 20%. If you're going, hey, buy 80% of the stock and flick it back around.
I'm saying buy 100%. The only way you could do it, because remember, even if they buy the investment properties and they're selling it, even if they buy it at market rates, but then they're selling it back at lower rates, that's going to cause, all of the house prices in New Zealand to drop significantly. You're going to have a situation where a lot of people are underwater. The value of their property will be less than the value of their mortgage. So the only theoretical way you could do this would be is if someone came in and bought every single household in New Zealand, every single house in New Zealand, cleared all of the debt and then resold it back to them at that kind of average market rate that they want you to sit at. And that even I can't even imagine that. That's impossible.
Yeah. Even just the scenario where Kai and Aura just bought the houses themselves, the 21% there at investment properties, that would cost $400 billion, which might get this, is 93.6% of New Zealand's annual GDP.
Yeah. So if you thought that we were a property-focused economy now, imagine what that would look like if that went down.
So none of this maths.
Yeah.
Mike, I don't know why. I think we do enjoy these conversations because we know none of this is going to happen. It's very hypothetical. But from a economic perspective, interesting to talk about what might happen. Let's talk about what would happen to the economy if house prices did drop that much.
Yeah. So, the banks would freeze. Instantly, you would have illiquidity in the banking market. So there's no capital flow. I would be surprised if any of the banks were still open. Maybe there might be some open in Australia still, but there would none of the big forwards that would be open in New Zealand. There'd be a run on the banks because basically their assets would come down so much, and their debt would still be well above the book value of their assets that they would be insolvent.
Immediate financial crisis.
Yeah. So unless the government bailed them all out,
It's not financially feasible.
I just don't even know how you would do that without completely ruining the economy. Yeah.
I mean, we're talking about like New Zealand would go bankrupt in that.
In a second.
Yeah.
In a second. Yeah.
What would happen to term deposits and like savings accounts in that scenario?
Gone.
Right.
It would all go.
So it actually doesn't impact just those that have a mortgage or a house, but any money sitting in the bank.
If you have money in a bank, it would be gone.
Yeah. Okay.
You imagine that a 50% drop in house prices across the board, every single house instantly. I would say the average LVR across the banks in New Zealand is probably well over 50%. And yeah, your capital markets are dry up straight away. Yeah, and you got to remember that can't be fixed overnight.
Yeah, and when it comes to like even if the banking piece was okay hypothetically. When we think about when property prices go up, people feel richer, they spend more money, they upgrade, they build, it's all good for the economy. In a scenario where those who own a home lose half of their wealth overnight, what are the implications from like a consumer's perspective?
It'd be Mad Max. It'd be Mad Max Fury Road. Like, there's no money to buy anything. But we've seen this, right? And you've seen it in different ways through like hyperinflation. You've seen this in Venezuela. You've seen this in Zimbabwe. You've seen this in post World War II Germany with the Deutschmark. So like, you don't even need to make a hypothetical about what that would look like. We know what that would look like. You'd almost be back to bartering. Because what are you going to do? Call up your I don't know, cousins in the States and say, hey, can you lend me some money? How are they going to get it to you? It's just like,
crypto.
Maybe crypto, right? But then again, you come a step down from that. And if there are no banks, how are you eventually you take the money out of crypto and put it into fiat currency? It just like, it blows my mind as I try and think about it.
So if we put it all together, I mean, you're looking at serious risk of a recession because housing and the New Zealand economy.
No, you're looking at a guarantee of a depression.
Okay, because the New Zealand economy and housing is just so interlinked, right? And I think the big thing, Mike, is we're not saying the system, the way it is right. We both said that we like the idea of everybody owning their own home, but the ideology behind it to actually get to the outcome would just cause so much chaos. And for those that wanted to own their own home who are currently renting, they're still going to be significantly worse off.
Yeah, I think that if you are looking to genuinely solve the housing crisis or the affordability crisis and get, maybe not everyone, but the majority of people owning their own home, that's probably not my generation. It's probably not the next generation. You're probably looking like 2 to 3 generations down the track. You could slowly adjust things over time with housing stock, with loans rolling off and clearing down debt and winding down debt to income ratios, all of these sorts of things. Maybe you could taper things in the right direction. So over generations it worked out, but at best, you're 2-3 generations away from that being even close to a reality.
What about a scenario, Mike, where, we're talking about, we've got the current property stock and what would have to happen to make it affordable, the scenario where we just build just a truckload of $500,000 to $700,000 houses, does that create a different outcome?
Not really. There's a lot of houses on Trade Me at the moment. Additional stock, still costs money to build, and it still has a minimum value on it in terms of land, building materials, margin, etc., insurances. So I don't think that's, you can't just say if we build 1 million houses, that's going to fix everything, because that also probably doesn't resolve the problem in a practical way either, right? Yes, I'm not saying we don't need more stock, but look on Trade Me at the moment. There's more houses than there's ever been for sale. Can everyone afford their house? Has it fixed the problem? No, it hasn't, right? It's a complex issue of supply, demand, and affordability all across the board, right? And you can't fix one of them and expect it to be the silver bullet. We've tried to just fix demand. We tried to take some of the demand out of the market when we put the new rules on investors and Brightline, and we stopped overseas investment. We tried to fix the demand piece. That didn't work. We are relaxing building codes at the moment where builders can sign off their own work. We're opening up more space to be built. We're allowing higher density building. So we're also trying to fix the supply issue as well. But the affordability issue is not going to be fixed just from those two, right? You need to unwind that over like a series of generations.
Yeah. So like it or not, you can't fix the current system. I think what would be good, Mike, is talking about, well, what could we do that gets similar sort of outcomes for Kiwis?
Yeah.
And this is where it comes to really good landlords that are making sure they've got homes to healthy home standards.
Yeah.
Maybe we start talking more about renters' rights as well, where they've got, like, say, if you look in Europe, I know you spent some time over in the UK, where we're talking about, that they do have more stability. Their family are able to grow up in that home. What do you think?
That's an attitude adjustment more than a regulatory adjustment. I also think I look at it probably from a slightly different lens, where I look at it from the less you tinker with the capital markets and mortgages and lending, the easier it will be for people to afford things, right? And every time you put a new rule in place, we saw this with triple CFA was the big one, where all of a sudden, you went to Uber Eats 3 times in 1 week and you can't afford a house, right? Like, trying to make things safer for consumers doesn't always have the outcomes that you want, and that sometimes a little less regulation and a little more trust that, the risk appetite of a bank and that they know what they're doing may be a kind of an easier way to solve the problem over the short term.
Yeah. So this is an incredibly complicated topic.
Nah, it's not. Build some houses, rock and roll, should be right.
And we have built some numbers to show the impact. Yes, there is a whole number of assumptions that are built underneath it. But has this changed your view of property investors in New Zealand and whether potentially you want to be a property investor in the future? Have we unpacked the real reasons for the New Zealand housing crisis? Let us know in the comment section. Mike, I'm sure they're going to come for us in the comment section.
El cockroach. Call me a cockroach, it's fine.
Yeah. We want your thoughts, so please let us know. Much love to Lighthouse Financial for sponsoring this episode. Please subscribe, give us a review, give us a like, and we'll catch you next time.
Cheers.